Good evening, class. Today we'll be looking at cash budget, continuation of cash. We'll be looking at cash budgets. We've been looking at budget and budgetary control. In our last class, I gave you a question which you are to solve. Today we'll solve that question and we'll look at the next topic. The next topic, which is accountability in public sector. That's our objective today. We'll be looking at the illustration. I have the illustration here. I gave it out in our last class. The state government they has a problem of not being able to pay the salaries of workers promptly. Apart from the statutory allocation receivable from the state and federal government, internally generated sources are merged. That's a mistake. Merged. You are a chief accountant assigned the responsibility of managing the treasury. The following information is available. On 31st May 2009, the state government anticipated the underlisted transaction up to 31st December 2009. This is the details in the table. We have June to December. We have statutory allocation, internally generated revenue, salaries, and other payments. Required: prepare the cash budget for the state for June to November 2009. B. Advise the government on the ways of optimizing the use of liquid funds. So that's the question in our last class, and I believe most of you attempted it. Cash budget is the same everywhere, both in your PM, your SFM, and every other aspect of accounting. But the only difference is that the cash budget of a public sector, of the public sector, that's government, state government, or local government, differs a little in terms of items involved in it than that of a corporate body. The receipts and payment, the items are a bit different because for public we have sources, they have different sources of income they have different sources of income compared to that of corporate body. For public sector, they have like the statutory allocations given to them every month. We have internal generated revenue, they have fines collected, they have for state government the personal income tax collected. Then for federal government they have SITA, that's petroleum and the rest. So they have other sources of income. That's the only difference, but it's all together. That's all the same thing. If you look at this, the calculation is way simple. This can be solved in two ways. The first one, we have your receipts and payments tagged A and B. Under receipt, that's where you write down all the inflows. Then on the payment, you write down all the outflows. You write out all the outflows. Looking at the inflows, we have statutory allocation and internal revenues. This first method is quite easier and it doesn't consume much time. It's always advisable you make use of this in the exam, because all you have to do is just to put up the table, write the months, give a column for your total, then write your receipt, add it up with the tag total A, then write your payments, add it up, that of different months, then you total it, having it B. Then you have your balances A minus B, that is your receipts minus payment. Under your receipt minus payment, that is A minus B. The total you have in June is 60,000. The total you have in June receipt is 60,000. Then total you have in payments in June is total you have you net it off. The total you have, you net it off, that is A minus B. When you have that 60,000 minus 10,600, it will give you 54,400. That's how you get the whole balances from June to November. Then the balance carried forward. Here you'll be looking at the balance, that's the balances from the previous month. Assuming they gave us balance for May, that's that's the ending balance for May. That's what we use as brought forward for June, but they didn't give us. So if you look at July, the brought forward was the closing balance of May, which is 54,400. That's the same with the rest of them till November. Then the balance carried down is the balance at the end of the month plus the balance carried forward. That will give you the balance carried down. Looking at June, there is no balance brought forward, so the balance carried down is the same as the balance for the year. Looking at July, the balance for the year is 76,480 minus balance brought forward from June, which is 54,400. If you add it up, it will give you 130,880. So that's the same with the rest of it. Then the alternative method of solving it, you have to finish out of 1 month, carry the balance as the balance brought forward before you continue solving. As if you have to use this method, you have to write the month, have your balance brought forward, which is none for June, your receipts, statutory allocation, internal revenue, add it up, which will give you 60, payments, salaries and other orders, which is 600, add it up, which will give you 5,000, which will give you 5,600, which will give you 5,600. I think I made a mistake earlier when I was calling those figures for June, but I know you saw the figures there, so it's okay. For this particular one, the alternative method, when you have the payments, you have salaries 5,000, other payments 600, add it up, you get 5,006. Net it off from the receipt, which is 60,000, you get 54,400. That 54,400, you carry it over to the next year, July, which you put it at the top. Then you have the receipts and so on and so forth. When you see it, it's self-explanatory. If there's any question at this point, you should draw my attention and let me know. Then we'll be looking at the B aspect of the question, because we are told to prepare the cash budget for the state for June to November 2009. Then the B aspect is advise the government on the ways to optimize the use of liquid funds. This is the aspect of management, because one of the benefits of cash budget is it helps you manage cash, helps you know when you have liquid, when you are too liquid, and when you need to make available some cash, so you'll be able to meet your short-term obligations. That's one of the advantages of cash budget. So looking at the question, advise the government on the ways of optimizing liquid fund. So we have the B, advice on liquid fund optimization. The liquidity position of the state government is not under any threat. If you look at the question, at every particular time in the month, the government has liquid cash. So it means that they don't have liquidity issue. They always have the resources to meet their obligations. Nevertheless, the government is advised as follows. 1, to purchase material. Purchases of material should be done in bulk to secure quantity discounts. Then secondly, excess liquid cash of about 500 million, I will be reducing it to 2,000, 50,000, 125,000, 195,000, 270, 330, and 360 should be invested in marketable securities. All these are all theoretical. Even you as an accountant, because we are all accountants, You as an accountant looking at this figure, you should see that at the end of June, they have about 54 million, approximately 54 million lying idle, not invested. So if the federal government could invest about 50 million, because they already have their budget from June to November, so they already know how they are going to spend cash and the amount of cash they are to get. Doing this budget, knowing that at least their surplus cash keeps increasing from June up to November. If you check, as of June they have surplus cash of 54 million. As of November they were having surplus cash to the tune of 360 million. So they are advised to invest this money. As of June they should invest about 45 million or 50 million into short-time security that will take about 30 days or 60 days to mature, knowing fully well that there is projection that there will be idle cash. They should invest most of those resources into short-time security. I don't know if you have any other answers to this which you can likewise tell us by observing this, because we are all accountable. When you look at the statement, we all have our different opinion. Some might decide maybe for the state government to do something aside this, but in my opinion I think they should invest in short-term securities. Then the next illustration, that will be an assignment. You have to look at it. In our next class you will solve this question. You will solve it before our next class. In our next class we'll do the solution, that's the correction for those that solved it. Then we'll go over to another topic. Then if you have any other question from the ICANN pack regards to this, you can ICANN Pathfinder, you can forward it down to us. We'll trash it out in one of our classes. So this is the illustration. This illustration, you cannot read it through. Reading it will consume our time, because I know that you can always write it out. This illustration is quite simple. It's quite simple. Now the new topic we'll be looking at is accountability in public sector, because we know that one aspect of accounting is to make one aspect of accounting is for account holders to be accountable, to show account of what they do, especially in public sector. So concept of accountability in public sector. Accountability is an obligation to answer for the execution of one's assigned responsibility. It is a requirement to provide explanation about the stewardship of public money and how this money has been used. Accountability comprises two distinct components: rendering of accounts and holding to account. Rendering of accounts. It is by rendering of account that the information about the behavior of a public organization can be obtained. This means that without rendering of accounts, there can be no accountability. Rendering of account, that is preparing account or making accounts. That's what it means, rendering of account. Then holding to accounts. Holding to accounts. This involves the exercise of judgment and power over public officials. Public accountability can be achieved only if those who receive the accounts have power and ability to take action on the basis of those accounts. Accountability is not just about responsibility of the public officers and the institution to the people they support, but also includes willingness on the part of the office holder to submit to scrutiny to the appropriate office he holds. Physical transparency. This is the aspect of accountability that requires government to carry out all aspects of budgeting, responsibilities with openness. That's physical transparency, making all aspects of government open. Like as we heard, Buhari wants to borrow. Buhari, they just recently approved 5 point something billion dollars from him, and he also rendered application to Senate of about 20 something billion dollars also, which Senate haven't approved yet. At least we the public, we know of that. We know of what's going on. That's physical transparency. When government prepares budget, it is being read in the house. You get to see what government intends to spend our money on. That's physical transparency. Now, the next thing we'll be looking at is IMF Code of Good Practices and Physical Transparency. That these are the code given out which public offices are to uphold in order to meet up with this physical transparency. One of the codes include one, clarity of roles and responsibility. That's to say the government should be separated from the rest of the public sector and from the rest of the economy. Also, public policy and management roles within the public sector should be clearly stated and publicly disclosed. That's clarity of roles and responsibility. When there is clarity of roles, each sector or section is given each role to perform. At least you will know who you will hold to account for something. The next is open budget process. The second is public availability of information. That's making sure that the information of the public is seen. If you go online, browse about account statement of most of government-owned institutions, you will get to see it. Then the fourth one is assurance of integrity. Assurances of integrity. This has to do with physical data should meet accepted data quality standards and budget forecast. An update should reflect recent revenue and expenditure trends. Underlying macroeconomic development. You cannot read this through. The next we'll be looking at is conditions that facilitate the promotion of public accountability. Conditions that facilitate promotion of public accountability. In addition to the two conditions of rendering of account and holding to account earlier discussed, the following conditions will also facilitate the promotion of public accountability. These are conditions that can promote public accountability. One of it is existence of democratic institution that allows for changes in leadership through free and fair election. That is all one. And one thing we all have to learn in order to pass this ICANN exam, you are given a guide, and I believe as an accountant and someone, I just believe as an accountant, there are some things we should know. When you ask conditions that facilitate the promotion of public accountability, it's not much you have to read up these tests in order to know. You as an accountant, you have to think, what do you think is necessary for there to be public accountability? What do you think that a country should do, or what do you think that should be in existence for public accountability to be upheld? When you think it through, you can generate your answers by yourself. But what I have here is existence of democratic institution. The next one is existence of leadership that genuinely believes in and committed to the notion of public accountability. The third one, public accountability needs the presence of active investigative media. That's active media. Then 5, they should urgently address the issue of poverty. That's through poverty reduction targeted government expenditures, because there are some expenditures that government will make in order to improve the life of the poor. when you do this, most of, like, if you check during election, most of the youths that are unemployed, they don't have much doing. They always hope towards election in order to make a living. They see it as an opportunity, thereby waiting for government to dole out money to them. And by doing that, you don't expect the government that spends billions of dollars in election by paying talks, buying election and all that. You don't expect the government to be so accountable because they need to recoup the amount they invested. Now we'll be looking at the measures in place to enhance public accountability. These are the measures Nigeria put in place in order to enhance public accountability. One is the Fiscal Responsibility Act of 2007. That's the act that they enacted that had to do with that has to do with openness of budget preparation and government operations. The next is Public Procurement Act. That the public should be aware of the acts, what the act, you all should download this act and read them. What the Public Procurement Act says is that the public should be aware of all the public should be aware of most of the government expenditures. The Freedom of Information Act, Nigerian Code of Conduct Bureau, ICPC, EFCC, Public Account Committee of the two houses in National Assembly, the Office of the Auditor General of the Federation and that of the state and local government. Then Nigeria Extractive Industries Transparency Initiative, and so on and so forth. We have to read them up and know what all these acts and agencies, their duties. I think that should be all for today. When you go through the lecture notes, if you have any information, you can let me know. Then if you need a personal PDF of it, I could still forward it to you. In our next class, we'll be looking at financial responsibility of public sector officers. That would be what we'll be looking at. Thank you very much. Have a good night.